Good morning, folks, and welcome back. So, I actually wanted to cover a couple of things. I know I haven't posted in a while, but frankly, it felt like the markets were pretty quiet and volatile for the past month or so. You see, it's been kind of bullish because of the Fed interest rates getting cut one more time in December, but there is volatility because they're not sure whether the interest rates are going to continue to cut next year. There does seem to be a decent amount of debate on what the uh, going forward policy would be. You also have Jerome Powell's position starting to go towards its exit, which means that Trump is likely going to put someone else there. Realistically, it's probably going to be someone who's much more dovish on the economy. In other words, dovish on interest rates. So, somebody who would probably want to cut interest rates even more. But that's probably going to have more development in January. For now, I think the biggest stories affecting the markets right now are the RAM shortage, which, if you look at the price of PC and video game RAM, this is going up a lot. And RAM prices, GB. And the reason why these prices are going up so much is in part due to the AI. So, long story short, AI uses RAM in order to put a lot of the data that it's using somewhere. And the reason why RAM is so important is because when you're doing all these computational processes, you don't just use GPUs, you also need RAM in a lot of cases. Especially when you want to serve things to customers really quickly. You want to make sure that the results they get go fast, then you need a lot of RAM. So this is something that people have been noticing. The prices of RAM seems to be doubling in some cases, tripling in some cases. If you look here, this is 32 gigabytes of RAM for $500. That's a ridiculous price. You could get a relatively decent GPU for that price just 3 or 5 years ago. You see there are other ones here, like you get 264 gigabyte sets for almost $1,200. That's $500 or $600 just for one stick of these. For reference, I think if I recall correctly, I could get this something like two sticks of 48 gigabytes probably mm, only cost about $300 or so about 7 years ago, 7 or 8 years ago, I think. Now, just as reference, the reason why these prices are, again, going up so much is because AI needs them, and also because there's a shortage on the supply side. Now, if you look at companies like Micron has been doing. Oh, there you go. So Micron has completely hit the earnings out of the ballpark. And one of the reasons they've done so well is because they're selling to these AI companies. So you can see that they are continuing to see high demand there. And you might think, oh, well, that's interesting because it does seem like it might have parallels to NVIDIA. Yes, but there's also potentially a bubbly nature to it. The AI trade seems like there is a certain amount of unwinding there. If you look at, for example, I think QQQ is pretty well leveraged in the AI space. And you can see that it's been pretty volatile these past couple of months with ups and downs. So we'll continue to follow that story. Now, the other thing I wanted to talk about is something called the yen carry trade. The yen carry trade is basically when people use Japanese currency to make trades. And the reason why they would want to do that is because the currency itself is cheaper. So, what happens usually is that the Bank of Japan has very, very low interest rates, which makes it really easy for big hedge funds and lots of big financial groups to purchase that currency or to borrow that currency and to make sure that they return, uh, a tiny little amount of interest, if any. So basically, let's say I want to buy a lemonade stand. I want to create a lemonade stand. I want to start a business or something. Well, am I going to borrow from some bank in America, which would charge me, let's say, 5% interest, or am I going to go to Bank of Japan, which is going to charge me, let's say, 1% interest? Obviously, I want a better interest rate, so I'd go with Bank of Japan. This is just completely made up arbitrary example. But the point being, you have all these international groups who are using the yen in order to make trades. And when you unwind those trades, you are ending this whole phenomenon, which means people may potentially start selling off and then trying to use a different kind of currency. This I don't know. I don't know very much about the yen carry trade, but it seems like it could have international impact. So I think it's something else that we'd probably want to watch carefully because it could potentially have global impact. Not sure. Yeah, yeah, people do seem pretty concerned about this, so I think we'll keep an eye on that. So, there's one more thing I wanted to talk about, which is I wanted to share with you guys this cool newsletter that I'm creating. Um, so, right here we have, let me see here. So, here is the daily market analysis report that I make on a regular basis. Now, I am working very, very tirelessly uh, to make sure that this analysis report actually seems kind of accurate, that it's consistent, it doesn't break down easily. But the long story short is, I'm a machine learning engineer and a data scientist by trade. And so, what I'm doing is trying to make sure that every single day there are some sort of signals that we can use to understand the direction of individual stock movements. Now, if you sign up for this newsletter, you will be able to receive this for free for now. I figure at some point I should probably start charging money because I think it's genuinely useful. And what we can see here is that for, let's see, this is, I think, today's report. This was generated last night. But if we go to the one previous to this, the ones generated yesterday, professional tier, you can see on 12/17, today's 12/18. The next trading day was 12/18. So let's see, one of the top confidence intervals. The confidence right now is pretty bad, 55 to 65%. Some of these are okay, I guess. Let's go ahead and test this one, see what the daily Solvi ticker. So this is up 0.76%. It said that it was going to be down. You can see that it's probably not going to be that accurate right now. But it does include a lot of different pieces of data that I think could potentially be useful, could potentially help make predictions of, or help anticipate statistical likelihoods of the future. So if you're interested, be sure to sign up for this newsletter, and these numbers are going to improve. I'm doing a lot of machine learning and a lot of data science on the back end to try and make sure that I can fix up these numbers. I actually used to have better numbers, but I had to, long story short, wipe a lot of those models because I wanted to scale things up. And I wanted to do things in a sustainable way rather than just a one-off. But you do see generally these are all, bullish today. Today was relatively bullish. So it says, yeah, SPY's 60% likely to go up. SPY did go up, kind of. It's kind of going up. So That's what we have here going on. One of the things that I'm really excited by also is the other stuff that we offer in this newsletter. So there's an economic calendar that talks to you about what's going to happen next. I'm going to probably try to include some other stuff too, like Reddit sentiment, crypto sentiment, things like that. I hope that it's helpful. And if you do want something on a consistent daily basis, it's not too difficult for me to get, then I'll try to go and get those things for you. Be sure to sign up for this newsletter soon, though, because I think probably in the next couple of months, I'm going to start charging money for it as it starts to finalize. And it's, at the very least, going to be something that could be useful, even if not entirely trustworthy. Full disclaimers, obviously, don't put money that you can't lose on things. But yeah, I'm excited to see where things go. All right, that's all for today. We'll talk a little bit more about oil and some of the other things happening in the economy later. But for now, I think the long story short is the economy is not doing great. You see unemployment rates going up, and you do see a lot of, yeah, you can see right here unemployment 4.6% with projected 4.5%. Core retail sales here were up a little bit. That's kind of good, but average hourly earnings were down. So people are spending more even though unemployment is going up. Retail sales month over month was about level, and earnings are down a little bit. That's not good signs. Definitely not good signs for the economy. Hang in there, folks. I hope that you guys all have a great holiday season. Get some time to rest and recover as I have. And we'll see you in the next video. Thanks so much.